You are listening to Charting Wealth for Monday, the 7th of November, 2016. The market continues to rocket down. When we look at our two-day chart on the total market, we see another big down two-day candle closing the week out. Again, our charts are not surprising us at all. We're going to do the weekly review and forecast, so please listen to that right after we finish this podcast. But looking at the day, remember the charts rolled over. We told you this. We all spoke about it and wrote about it back on the 9th of September. And the market's only doing what the market told us it would do. It rotated over on the week ending the 9th of September and has been going down since then. We're in the fall-winter trading zone. The market typically has much more clear movements than the herky-jerky summertime, and we're seeing the market do what the market does. And again, is this related to Trump being ahead in the polls? I've seen that the market's now discounting everything for Trump. You kidding me? We already saw this happening all the way back on September the 9th, and we saw the two-day chart rotate back over on September the 24th going down. Now we have a huge down candle for the last two-day candle on the total market, a massive candle pushing way through the Bollinger Bands that have been broadening out because they represent volatility that has increased since it got really low right around the 9th of September. Now let's continue to push through and see what's actually going on. Intraday, market down more in the morning than it was in the afternoon. The afternoon ended up for the week with a bit of a spinning top. We've got a long wick on top and a long wick on the bottom, a smaller body on the candlestick. Derivative oscillator also lost energy. It lost energy at the beginning of the day and in its movement later in the day. We didn't really have much of a change in the downward momentum of the MACD, or as we use now, the price percentage oscillator. Same calculations, just based on percentage instead of dollar amount, so we can use it in comparing other indices. Now, let's continue to move through our charts. And again, remember our getting in point on this 4-hour chart. For those of you who are paying attention, listening to what we were talking about on the 27th, that was your getting in while the getting's good, and it has been awfully darn good. But let's pay attention to the fact that we may see the market, because it's hit about the same bottom point on 3 4-day candles, could be getting ready to take a breather from all the down momentum. So we want to pay attention to that. Now we'll go back to the 2-day chart. We're going to look at a smaller index, not a lot smaller because it represents a lot of the volume in the market. It's the S&P 500 as represented by SPY. It too fell off the deep end on the 2-day candle, rocketing through the Bollinger Bands. Remember, with the volatility bands, the market does not stay outside those bands for very long. It moves back in, so we shall see, or the bands expand. But typically what happens, though, is there's a pulling in. We'll continue to watch, see just what happens. The down movement has, of course, increased the derivative oscillator's downward momentum, and we see this kink that started on the candle ending on the 31st when the market pushed over on the 2nd and then the 4th of November. That was the 31st of October. We've seen the PPO, or the MACD, accelerate even further down. Now, if we look intraday, what do we see? Well, again, your getting in point on this move was sometime around about the afternoon of the 27th. Again, look at that. Somewhere around 113, 114, all the way down to 109 in just a few days, because you can read the chart. If you wanted to make money on this, what do? You go buy an inverse fund. And again, we're not talking about real money. We're talking about your virtual trading account and you practicing. You would have jumped in somewhere around $38, $38.50, and as high as $39.38. Again, wonderful up movement on these charts. And again, if you have an even bigger short chart, an ultra short, see even more movement. Again, more risk, of course, because if it doesn't go in your direction, it's going to go down in value a lot faster. With reward, there is always risk. So again, pay attention because we've hit, it could be a bottom. It's only on the 4-hour chart. Remember, the weekly is still rocketing down and the 2-day chart is still moving down. So we'll continue to pay attention. Now we're going to go back to our 2-day chart. We're going to move over to the Qs, which is, of course, the NASDAQ 100. Big down movement over 3 2-day candles over 6 days. The PPO heading down, the derivative oscillator gaining lots of downward momentum, again pushing through, not quite as crazy as the S&P, but pushing through the Bollinger Band. And again, what we had already seen was a great deal of downward movement, which actually pushed the Bollinger Bands out. It had happened in the 2 prior 2-day candles before the latest one ending on the 4th. Now, if we look intraday on the 4-hour chart, we see that the market ended up with some up movement at the end of the day. So again, it was a Friday. Maybe things were grinding to a halt in some of this downward momentum, and the market's going to digest that starting in the next week. So pay attention, those of you who have been riding this wave with lots of profitability. Whenever you start seeing slow ups and backups, you might want to take some of your profit. Again, take profit when you want to take profit. The one thing we talk about over and over again, when you do your initial virtual trade, go ahead and put in a good till canceled sell order with a profit you will be happy with. How do you set that? You set it at a percentage. You set it at what you've seen in prior moves, either over recent time periods or at the same time in prior years. Talking about the same kind of time period. You don't want to compare movements in the fall-winter trading zone to movements in the summertime trading zone or a transition zone necessarily. And for those of you who don't understand what trading zones are, we have not done a training on that yet. We will work on that and put it out in the next few days for you. Again, for those of you interested in all of our training, it's available at chartingwealth.com. You can also find it at our YouTube channel, and you can find it at iTunes. Now, lastly, what are we going to do? We're going to go back to our 2-day chart. We're going to take a look at gold, which continues to go up 0.07% for the day. Gold crossed over on the 2-day chart, going up back on the 2nd of November. Of course, it had been going up for quite a while prior to that crossover. And if we look at our 4-hour chart, which we've been using as our all-in-one chart, it has been prescient. I mean, just told us it's crossing over, going up back on the 13th of November, and it has kept going up. We're above the 2-day trend line. Remember, gold was, and we're going to review where gold is as far as the weekly chart goes in our weekly review and forecast that we're going to put out very soon after we record this one and get it posted. But we can see that gold has not moved really above its high point back on the 2nd, the afternoon of the 2nd of November. So again, those of you, pay attention. If you've been in gold a long time and haven't sold any of your virtual trade, don't be around to lose it all. And again, if it does roll over and take some dips on Monday, don't fret. You don't have to make every single penny. You can sell a portion of it and just see what happens as to whether or not we're going to see a crossover going down anytime soon, or if gold is just going to continue to chug up. Just again, pay attention to these charts. They have been working for us. People say, how long do you use a chart? Until it doesn't work anymore. Then you try to find a better one that works. But this gold chart has been working since sometime in February. If you remember, the end of last year, it stopped working for us on the 4-hour chart, and we couldn't do any trades in gold for a while because we just couldn't find any good way to measure what was happening with it. Well, that changed in about February, March, and we've had some good opportunities to do virtual trades. Now, I keep saying virtual trades. Remember, we're not a stock calling service. We don't give you market advice. We're an education firm. We want you to learn how to read these charts because they are your roadmaps to wealth. If you can read stock charts, it's like having a crystal ball, being able to see the future. We do everything we can to minimize risk, maximize gain, That's what we're all about. If you appreciate what we do, please go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. You can also find us on Facebook, Twitter, Instagram, YouTube. Go to our YouTube channel and subscribe. That's one of the first places we upload everything. But remember, our biggest fans are at chartingwealth.com. Sign up for our daily podcast. We'll email it out to you every day along with the weekly review and forecast, which is coming up next. It's our most popular of all the podcasts we do, and we're getting ready to record it, and we'll get it out for you in just a few minutes. God bless. Thanks so much from chartingwealth.com.